let's talk to the head of power service at Bloomberg New Energy Finance, Michael Lawn. So, Michael, I mean, straitened times really for renewable energy, but what I want to get a sense from you is, where are we globally in that cycle? Are we beyond infancy, engaging with renewables on a stronger basis?
Well, the way that we look at it, renewables have been historically obviously very dependent on subsidies, but that period is coming to an end. That was sold to the subsidy payers, which is the ratepayers and taxpayers, on the basis that it was to get the industry kind of over the hump, past its nascent period and into maturity. And especially in these times of difficult financial crises, people are saying, well, we don't want to pay that anymore. And so what we're seeing is people cutting back on those subsidies heavily and saying industry now needs to stand on its own 2 feet. So I think we're in a period of transition from subsidy and into a more kind of long-term free market solution for renewables.
I'm interested in your opinion. Equity markets falling, equity returns falling. Is there a possibility that in these straitened times that this industry, renewables, whether it's solar, wave, wind, actually could draw private capital in? Is it big enough to justify that kind of draw at the moment?
Well, I'm not going to give you any specific equity recommendations, but it certainly is continuing to draw capital. I mean, what we're seeing in Europe, for example, is we're seeing a tough number of years for the industry. For example, in the onshore wind market, it peaked in the 2009-2010 period at around 10 gigawatts of install a year, and we're going to see something similar, maybe even a little bit more than that this year. But over the next couple of years, we expect that to drop maybe to 7.5, so something like 25%. So definitely difficult times, but it is continuing to draw in capital. The subsidies are still there, and it seems the political will is still there to keep these industries growing. I think the question in the longer term is, how do they transition to being a fully free market industry? How do they get to the point where they're entirely able to fund the projects and fund the developments from the power price?
Let's just talk about that. I mean, you've mentioned one or two of the new energies. Which of them, Michael, do you think has the ability to grow up and become a big boy on a global stage and has the capacity to go forward? Wind, solar, wave, or is there another one I've missed?
Well, there are several others that you've missed, but including biomass, for example, which is having potentially huge growth and boom in Europe, depending on where the subsidies go with that. But certainly wind is already arguably competitive with gas or with coal, depending on the region. If you've got a very, very good wind site, then that's arguably competitive right now at around kind of 50 euros a megawatt hour levelized cost, which is still above where the power price is right now in Germany. For example, power price is around, baseload power price around 40 or even 35 at the moment. But in the longer term, it's getting competitive. Similarly, solar PV, and you're starting to see that on roofs all across Europe right now, not just Germany and Italy where it was booming. That is competitive on a retail basis right now. So if you want to spend 8,000 euros in central Germany, you will get a small return on that investment. Now, whether people are going to put up that capital for that small return, probably not. So it still needs subsidies for a little longer, but our predictions are that will come down, and that they will be both wind and solar will be competitive on that basis.
Michael Lawn from Bloomberg New Energy Finance.